Us. So last week, the University of Michigan, they published their sentiment index, and the media, for example, CNBC came with those induce fear headlines. Ladies and gentlemen, please don't listen to the media. From time to time, CNBC in their pro version, they do a lot of good work, but this is what I get really pissed with some journalists and editors in the US. How you dare to publish this information? America is on the verge of what I call the sonic boom. And the reality is, yeah, it's not going to be a straight line all the way to the top. It's difficult to climb a mountain. And every time that you see this, and yeah, in fact, the data was the lowest reading since 2011, but the consumer sentiment is just dictating the beginning of great times. And all this dramatic decline comes as a Delta variant of COVID-19. Yes, there are going to be variants. There are going to be challenges. But together, individually, country with their own citizens, they will come up with solutions. We already know the game, the challenges that we face with the virus. And yeah, Pfizer, Moderna, Novavax, all these companies, they're working on solutions, but it takes time. Meanwhile, we just have to adapt and be creative. And that's what I like about Americans. My dad being an American guy, he lives in New York. That's what I like. The flexibility, the open mind. This is just a blip, not a disaster. And what I see when we have this decline, for example, that was the lowest reading since 2011. And I have the SPY, this is the ETF, the oldest ETF, or probably one of the oldest ETF created in 1993. I see the market telling me that good times are ahead of us. So today, I just don't want to produce this forecast. And once again, make sure you have the confidence to be invested. The melt up is not done, and it's not going to be done for at least 4 or 5 years. At least 4 to 5 years. And with the pattern, the price at this level, yes, Coach JR can tell you, guaranteed, in a way, in a bold prediction, bold forecast, we will see the SPY above 510 points by Q4 of 2022. The US economy is about to enter the greatest boom ever. And there's a lot happening, discussions between the decision of Joe Biden and, pulling out the troops from Afghanistan. We'll talk about a little bit about the whole thing later on the next video. But I just want you to understand, all this is just setting up the stage for U.S. stocks to be on high demand. Forget about China. Maybe a few stocks like NEO, one here, one there, few European stocks. But is America the one that is about to enter again the roaring 20s? Don't forget that. So let me coach you and give you a few pointers. Now, you see me a lot. I work with volume. There's no clue. A lot of my tools are powered by the great team of technicians at Hawkeye Traders. I love it. I'm coming with great content for those tools because I truly think that every single American must use them. They're simple. They are very visual. And they give us good pointers over time about when to enter. If you look at volume here, you have an entry, but the safe entry is at this level at 313. If you were to be following and have your templates following roadkill, heat map, you will be up on the ETF only. If you add this to your 401k, about 36%, which for something without leverage, it's something absolutely astronomical. Now, let's take a look at this and work a little bit with trend Fibonacci. Fibonacci on your TradingView or any TradeStation package. Just pick the low of March 2009 all the way to the top of the coronavirus. If you look at this, what we really see is we have 10 years of prosperity after a big collapse in financial markets to the subprime that we all know. But look at this, that no one is there's no journalist, there's no technician that I heard has been saying this. If you do know one, please share in the comment section. I want to hear from you, okay? The decline of the second half of 2018 and the COVID-19, they come to a double bottom, technical double bottom at the confluence of the 38.2% of Fibonacci. That means that if you take the full range rotation from the low to the high on February before the collapse, you have 272 points. And you have a full figure expansion of 400%. I repeat, 400% from, well, actually since 2008, 2009, that's the great financial crisis. If this is where the market slowed down, meaning it stopped going down, you will take this information and rotate higher. Rotation, remember, price rotation. And you take 272 points. Let's take 274. That means we have guaranteed on the table on the SPY at least 510 points, 511 points. This will happen. And I don't expect any massive selling until we reach this point. Write it down, see exactly the step-by-step how you get there and how everyone will get there. So you ought to be long. You ought to buy U.S. companies. That's where your money has to be now. You need to take the risk. You need to expose yourself to look for higher yields. Now, once you have that rotation, now look, we have a 400% rotation. We have only 115% rotation with this figure. So far, so good. Now, I can do this very simple for you and tell you this can easily rotate all the way at least 200 points. And during this decade, 2020 to 2030, our second target will be at least 700. And you may say, oh, well, what kind of analysis is this? This is just projecting higher. No, I'm just duplicating the previous rotation by half. So when the market collapsed in 2008, 2009, it went as high as a full duplication of about 400%. This is the low. Let's take a look so you can see exactly what I want you to understand. This is not even the low. The low actually took place at about 66 for SPY. So from that point all the way to the high before the collapse due to the sanitary crisis of COVID-19, market expanded 409%. That's the beauty of the American stock market. It expands exponentially. Please write this down. That's why since 1800s, stocks are the best class, the best asset class, and with the lowest volatility compared to Bitcoin, for example, right? We'll talk about that also in future coaching videos. But what I want you to expect is we got a massive double bottom. This is the technical beauty of understanding. This one went up 409%. That's 273 points. And from the high, it went twice, minus 100%. You went up 273% and you gave back in rotation only 100%. That's a great technical deal. We're going to keep going up. End of story. Forget about China, forget about valuations in Europe that they look attractive. They are down there because there's no inflation. Demographics are negative in Europe. Learn this. Demographics are negative in Europe. Without a very young, strong population, without a strong mid class, you go nowhere. The median average of wealth in the U.S., about 45, 50% is $100,000. That is because there are a lot of power in the U.S., so there may be some minorities that they're not there. But the fact is, the mid class in the U.S. is not only wealthy, but also they are very tech savvy, and that's another story. Most of those markets like China and Europe and Latin America, the weight of their exchanges, stock market exchanges, is not a technology, it's an old industry. They're not up to date, all right? So not only I want you to think that this is a reality, my second target, but I want you to understand that the price is dictating. Great things are ahead of us. And although CNBC decided and dared to be very dramatic with their headlines, this decline in consumer sentiment is just an opportunity because they will save more money and they will reconsider their investment patterns. And all the excess in liquidity that U.S. citizens have, it goes directly to the stock market, IRAs, and also 401k. Period. That is not the same in Europe. Germans, for example, they put everything on savings. So the bottom line of the story is consumer sentiment is set to rebound big time going into 2022. And again, based on all indications that we have, I repeat, if you only take this figure, the figure expansion of the ETF, and you plot that into the screen, you do know that basically you're going between 510 and 511 all the way before Q4. These coaching videos are going to keep coming. This is the first edition, and I will be publishing this on our blog post for the Profit Flow group. And additionally, we'll have it on Market Shares Daily YouTube channel, my publisher. I want you to come back. Now, I want you not to smash the like button. I want you to smash the subscribers button. I want you to also sign to my blog post because this kind of information will be there. This is actionable content. I want you to live and breathe the market. But most over, understand that you have to do this because we're in the age of ultra digitalization. And you need to take your hard-earned cash and expose it to an asset that will give you multiple times, will allow you your cash to grow faster than you can make it. And that is the US stock market. So I said it. I think everything has been said in this video. There's evidence. And the most important evidence is the price pattern. If things were to get ugly, we will be right now minus 25% again, right? So pay attention one more time. Smash the subscribers button on the YouTube channel and join our readers newsletter or pretty much our blog post, or subscribe, ask how you can subscribe. And if you have any questions about the techniques I'm using and all the tools I have from Hawkeye Traders, please feel free also to contact me or just go to the description of this video and share your ideas. Until then, remember,